new variant. Remember COVID, right? There was a new variant. There was this new scary thing. There's going to be another wave of lockdowns. There's going to be total calamity, second waves, all this kind of stuff. All of this stuff was causing people to sell. It was causing people to panic on any of these dips, sell the lows, and not having a focus on the bigger picture. So the exact same thing is going to happen here. You're going to hear about wars. You're going to hear about recessions potential. You're going to hear about economic collapse. You're going to hear about banking collapse, all this kind of stuff. Need to understand that in this current part, this phase of the cycle, as it's continuing, if the markets and the charts continue to show bullish structure, which I'll keep you updated on every day, every week, as I always do, any of these FUD events, any of these dips, and they will come. Bull markets regularly have 10 to 30% shakeouts, corrections, leverage liquidations. These are opportunities to buy or to get long, right? To either add trades if you're a swing trader, or to accumulate more coins on dips when other people are panicking. And that's because you have this rising tide effect. Money is flowing into crypto at a record pace. I guess maybe not record, because obviously COVID and the stimulus was the biggest one. But this is the stable coin supply of crypto, and it is rising and rising and rising, and it has broken previous cycle highs, and it is going higher as more money is flowing in. So, the US elections was a big one, big catalyst, which is causing this current move. But since the ETF rally began in October of 2023, we've saw a renewed interest in crypto. We've seen Bitcoin having this amazing move, and we've seen an explosion of interest across Solana, meme coins, all that kind of stuff. There are two types of market environment. One is called PvP, player versus player, and one is called PvE, player versus environment. If you're a gamer, you'll know what that means. If you're not a gamer, it simply means player versus player means that there's no new money coming in. Okay, so the amount of money that's in the industry, because there is only a certain amount of actual real dollars or euros or whatever, real money that's there, that everybody has to battle over. Because everyone's trying to do the same thing in crypto, trying to make money. Yes? So, when you have a period where there isn't new money coming in, and assuming you have roughly the same number of people, that means for me to win, somebody else has to lose. For you to win, someone else has to lose. That's why it's player versus player. It's like you're battling against the other people. But when you go into a period where new money comes in, that's where it becomes player versus environment, because you're already here and you're already holding coins. And that means that the new money coming in is lifting everything. The rising tide lifts all boats. The new money coming in is not you battling against somebody who's already here. It's both of you and me and everyone else benefiting from all of this new capital coming in. That tends to happen based on big catalysts, and we've just had one of the biggest ever with the election and the pro-crypto administration that's coming. And whether that turns out to be super pro-crypto or just kind of okay, it is vastly, vastly, vastly superior to the alternative, which was the 4 years of terrible crypto policy under Biden, which would have been continued with Harris. So you need to adapt to the market you're in and then allocate to, first of all, just to crypto. People stress and worry a lot, and they worry far too much about how to pick winners. And again, picking winners, of course, is important. Picking coins that do well is important. But most important is being exposed and having coins whenever the PvE starts, which is right now. You can see the stablecoin supply going above previous cycle highs. Therefore, this is new money. And that is probably set to continue, most likely, because we have long enough left. Most people's estimates would be 6 to 12 months, where it's worth it to come in and to allocate and to buy and to take profits on some of the stuff that's going up and rotate it into other things. And you can see this rising tide effect. Now, the later you enter, the earlier you'll have to exit. So if you're looking at different people, different participants, you have to kind of plot yourself and where are you in this sort of overall environment, right? So let's say you stuck around in the bear market and you bought all your coins for this cycle here, right? You have the luxury then of waiting for very, very clear tops. You can wait, let's say, for example, you stuck around during the bear and you were buying through all of this. You could wait for this really clear sign of weakness here, right? You could wait for all that crash to happen and you could exit here. Or you could exit even after this one and you could exit there. You have the luxury of waiting because your average entry, the coins where you bought them and where you accumulated, is so much lower that even if you don't catch the absolute top, which is not the goal of the market, the goal of the market is to exit when it's over. When it's over doesn't mean I have to pick the top. It means when my systems tell me that it's over, and for me that's based on price action, of course, because I'm a chart trader predominantly, along with some other subjective signals, such as all your top signals, which you'll get into, that is when you choose to exit. But people watching this may not be all in from that point. So let's say in 2020, you got in on this second phase as it was breaking all-time high. And if you get in anywhere here, your view has to be a bit different. Because yes, you can absolutely make money and it keeps going up. But if you are not early, which you'll know by the fact that you weren't around in the bear market, you will also have to get out sooner. So if you're somebody who's coming in later, like you're coming in just right now, you have no coins right now, you're still coming in at a probabilistic time, right? A time where we are somewhere around here. Okay, if we're taking the 4-year cycle, the 4-year cycle would be here. That's December 2020. So we're sort of November, December 2020. So you're getting in at a time where it's most likely going to continue rising, but you probably don't have the luxury to just keep holding it, as you might end up drawing all the way back down to break even. Let's just say it ends early and it drops all the way down. Somebody else could, because they could wait for a bounce. But you would be looking at, if you're in now and you're right and we keep going up for several months, even if the market still rises or still looks good or still looks bullish, you definitely want to consider taking profits based upon where are we at from your entry. And the way to view this is just, don't think about yourself, think about the other participants. So there's really two main phases here. We had two very lengthy phases of consolidation, which both seem to be accumulation. Okay, so there's a big difference in whether you are in here at the lows or you're in here. And of course, if you're in here as we continue rising, you have to view that again. Because what's probably going to happen is that the market will continue to rise, but it could come all the way back to here, right? And it could even go higher then after. But let's say it goes all the way up and comes all the way back, regardless of whether it goes up or down from there. What you need to be viewing it is, okay, if I'm in here and then we see it a few weeks from now, let's say end of this year into January next year, and we're continuing higher, you want to be definitely considering taking off some profits, because you don't have the luxury of allowing it to come all the way back down. Again, if you bought from here, you have the luxury of letting it come back because you're nowhere near your average entry. If you're entering here, it's the same thing. You should be considering exiting earlier. So when I talk about like 6 to 12 months, a lot of times one of the biggest mistakes you can make is to just assume, all right, well, I'll sell in November. I'm just going to go a year. I'm going to buy all my stuff. I'm going to hold it for a year, no matter what. I'm going to sell it in November of next year. That's not the correct approach, because the people who are in from the bottom are going to be selling all the way through 2025. So the last year of the bull market, assuming, and again, this all makes the assumption that this is going to happen, right? This isn't guaranteed to happen, but assuming it does happen. The last year of the bull market is where the people who got in at the bear market lows in 2022, people who got in early to mid 2023, they're taking profit all throughout the year. And so you see the biggest increases in price, but it will also be later money, so the people coming in later, who are buying, and the people selling to them are the people from here and the people from here. They will be taking some profit. You must also be too, especially if you're entering later. It's not early, it's not late, right? So we're not super late in the cycle. We're definitely not early. We're 2 years off the lows. So you have to consider, first and foremost, especially if you're playing in altcoins, like I said yesterday on the previous stream, which you must watch, long term, your goal is to stack Bitcoin, right? Or stack whatever hard asset you choose. But in the shorter term, the next 6 to 12 months, if you're in alts and they're going up and you're making profit, don't forget that the goal is to realize some of those gains. The number one thing is to not be stuck holding a bunch of coins that go all the way up and come all the way back down. Again, so I bought the majority of my coins throughout here and up to about here. I don't want to do this, but I could afford for it to go all the way up and come all the way back and just sell here later on, right? I could afford for that to happen because my average entry is way, way, way lower. I obviously wouldn't sell the absolute top, but I would be nowhere near losing money or breaking even. Somebody getting in here could end up actually losing money despite the fact that we had 6 more months of bull market or whatever it may be. So try not to impose your own will on the market, meaning, well, it needs to keep going up for me. It needs to keep going up for me now because I'm in, it now has to go. It's like, no, the market goes by its own cycle, right? The market goes by its own time frame. And wherever you jump on board, the market doesn't care. Doesn't care about you, doesn't have any belief or any love or any particular feelings towards you specifically. And therefore, you cannot impose your will on it. So to win in a bull market, you must be adaptable. Okay? How to actually win throughout the rest of this phase. To be successful, you have to be able to embrace new trends. And one of the things that really catches people out every time, every cycle, is staying stuck in previous cycle mindsets. And you can see this really clearly in this cycle so far. Obviously, outside of Bitcoin, the biggest trend and the biggest breakthrough of this entire bull market has been meme coins. You have to identify when that theme exists, and it does exist. You then have to accept that this is real. Don't fight it. Don't say it's stupid. Don't say it's dumb. Don't say it makes no sense. Again, whatever the market is telling you, do not argue with it. You can say that XYZ coin should be going up, but if it's not going up, the market is not wrong. You can say that meme coins are stupid and have no value, but if they have attention and they are rising, by definition they do have value because they're the things that people are making money on, and the goal of this whole thing is to make money. So people who see, right, the people who see what everybody else is making money on are going to try and make money on the same thing. The people coming in, because you're still early, right? Let's say you're still early and we go up for 6 or 12 months from here. The people who come in later, middle of next year, end of next year, they are going to want to buy the things that they have seen their friends, their family members, online, on Twitter, on TikTok, whatever. They're going to want to buy the same things that everyone else has been making money on. So it's not going to be some random coin that you've researched and that you like, but that has a terrible chart and there's no attention. It's going to be the thing that the market has decided, the market has identified, the market has set as the theme. That theme, overarching everything, is meme coins. Now, to actually win in that bull market, you want to identify, first of all, the positions you're going to take. And then you want to buy either during consolidation, after a pullback, or on a breakout, a confirmed breakout. Okay, so that would be like a 20% breakout above a key level, such as a previous all-time high when something is breaking out from its summer range. Example of this would be, of course, like BTC, and you can see it here. But, I mean, let's actually just look at the total market cap right now. So if you're looking at the best time to get in, and you're taking something simple like a 20% breakout, which is take your fib extension from top to bottom, if the market cap closes here tonight, at this point, above 2.92 trillion, that is a 20% breakout. That is a confirmed breakout. That does not mean that it can't go down. It means that it's much more likely to go up. And that would be the time at which you would say, okay, since it's been through all of this consolidation, since it's been through the bearish part, and now it's showing bullishness, and it's confirming bullishness, and it's going higher, that is the point where I want to be getting in, and I want to be riding the next leg of the trend. And you do that on all time frames, but we're talking here about higher time frames. We're talking here about buying into coins, so buying spot and holding them. And you hold them until they're invalidated or a better option arises. You do not want to overplay this market. One of the worst things you can do in a bull market is to shorten your time frames and not be patient with the coins. The coins you're holding, can do nothing for many, many days or many, many weeks, and then they can pump 5x in 3 or 4 days. Okay? That can and will happen. So do not try and impose your will on the coin. Again, if you bought something because it has a breakout, let's just say you bought this, if this was a coin, and you bought this because there's a valid breakout, and then it did this for several weeks, there is no reason to sell that. The breakout's still valid, it just happens to be consolidating. Because if you then try to sell this and say, oh, I'm going into something else, inevitably that will fly, and the one you were moved into probably stops moving. Do not break your plans. Do not sell your coins unless there is a clear invalidation. So if you said that you're buying it here, and if it goes back below and closes back inside, then you sell, okay. That would be an invalidation of the breakout. That's fine. But you should only really be selling for the next 6 or 12 months. You should really be spot long. So you should have coins, spot only, no leverage. And you should be seeking to continue holding them until such times as there is a major market top signal, which I'll cover later in this, or you identify clearly a better opportunity. So the way to look at it is, cash is trash. So fiat currency, like dollars or euros or pounds, these are not the things that you want to be holding in year 4 of a bull market, in the blow off top year, in the final year, in the post-halving year. That's not what you want to be holding. By the end of the cycle, of course, you want to be realizing some of that into it or back into Bitcoin. But during this phase, your portfolio should